Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. Macro Monday. Once again, let's talk about CPI, really the main focus this week. First, I'll start with a quick BTC discussion. IBIT, the Bitcoin ETF, seeing massive volume today. This might be an all-time high volume day for them. Certainly expecting another potentially $500 million inflow day. It's great to see mega volumes coming into this consistently, and it's surpassed GBTC handedly now. You know, none of this is one-to-one. None of this is, 25 million in volume equals flows, whatever. It's all loose until we get the final numbers at the end of the day. But if GBTC volume isn't leading, that typically means we have a pretty massive net inflow day on our hands, and price, of course, also in agreement with that. As far as BTC, we have the coveted bullish TK cross with price above cloud. The last significant long signal we had from the cloud was at 28. Throughout that, using the Williams fractals here, green support, red resistance, continuously it was telling you to add to the position, add, if assuming, you're not fully in at 28, but it's telling you this entire time to keep adding. The trailing stop loss in the green here moved up, didn't trigger until after the ETFs launched. Got you out at around 44, cloud gets you in all the way up here, but we were following that chart pattern, obviously. So next steps is watching for trailing stop loss support on the daily, but there's really nothing to do. We've had 8 or 9 green days here. We're going to see a pullback. Eventually, we're going to see consolidation. Eventually, we saw pretty heavy resistance here at 50K, psychological resistance. But at the same time, today's going to bring headlines. Today's going to bring attention. Oh, what do you mean Bitcoin's 50K? I thought that died, right? Oh, what do you mean there's an ETF? Oh, what do you mean I can just access that? So it's that type of stuff that helps move us higher. But so far so good on trend and consistent with bullish continuation. And in case you are curious how these fractals would form in a fast environment, let's say, I'll talk about NVDA later on again, but in a significant move on a high time frame, you very rarely see several prints of these fractals, and this would be the trailing stop loss on NVIDIA in that situation. And so even if you're not trading NVIDIA, I think it's a good idea to analyze it and watch it closely. Just paper trade, what am I going to do here? What is this candlestick? Where's the stop loss? Where would I move my stop loss if I don't agree with that stop loss, right? That's a pretty ugly daily candle. Inverted dragonfly, shooting star. What does tomorrow look like? Is tomorrow also going to close red? What does the rest of the week look like? Is that consistent with the idea of potential near-term bearishness, right? So having that sort of thought process, I think, is definitely going to help anybody trading anything crypto, because this is a crypto chart, right? We've seen moves like this in crypto pretty consistently. And I don't think if you've got a trailing stop loss all the way down at like 600, you're going to be happy if that gets hit when we're at 722 or whatever. So you can always drop down the time frames, look for more trailing stop losses. But just as a technical example, really interesting to look at that one. BitX also hitting its targets, hitting yearly pivots, bullish TK cross. All this stuff looks really good. This is the leveraged Bitcoin ETF. So far so good there. And just something else to consider, 50K today versus 50K in 2022. A very different situation, right? I think we've all, if you're still here at this point, we all know that, but it's interesting just to list it all down and say, yeah, it's much different, right? No Super Bowl ads, no hype outside of the ETFs, right? So 50 here, to me, certainly feels different. We don't have Tesla and MSTR maybe coming in talking about stuff. We don't have a lot of noise, right? It's just ETFs, that's pretty much it. As far as flows are concerned, one of the videos last week I talked about probably seeing $1 billion inflow on the week just because of how the ETFs were looking. And that's pretty much where we're at, 1.1 billion, which is another massive week. A lot of that came later in the week from BlackRock, a little bit out of Canada, a little bit out of the global ETFs. But I think as we're settling in here, we're starting to see true inflows in a sense that any seed funding or pre-purchases for the ETFs probably completed by now. Anybody who was moving stuff around, probably getting close to being done with that at this point. The 4 sellers in GBTC, as we've discussed, done for the most part. And from a multi-asset perspective, if we look at the entire ecosystem, you're seeing the alt BTC pairs in real time with these flows, right? Like, I mean, it's no contest. ETH finally getting a little bit of the flow there, but not much going on across the board other than Bitcoin. Part of that is just the US market doesn't have great access to these products. I was talking to somebody today about a Solana product. Europe's got multiple Solana products that are staking, that are spot. We have none of that, right? So until we potentially, many years from now, probably get something like that, we probably aren't going to see the types of flows from the institutional side that we're seeing for BTC. And globally here, again, it's all about the United States. USA #1. As far as the calendar is concerned, again, we have tons of Fed speakers throughout the week. We have PPI at the end of the week. I personally think, this is the whole ball of wax this week. It's all about CPI. It's all about whether or not we are going to come in under or over expectations based on Trueflation. We should come in continuously down on year-over-year CPI. And we're also seeing that in the Fed's own projections. So 2.94-ish is what CPI should come in at tomorrow. Last print at 3.4. So risk market should like that. Dollar should not like that, because that means rates probably coming sooner rather than later. And if we look at the rate probabilities, I'd imagine this might shift the no cut for next meeting a little bit. I don't think it'll actually matter for next meeting, but I do think these probabilities are going to shift towards increased odds of cutting, not because the economy is weak, but because they think they may be too restrictive, right? Based on what I'm seeing in my anecdata locally, based on what we saw at the Super Bowl, right? There's 400,000 people showing up, insane ticket prices. Stadium looked full to me. All the boxes looked full to me. I don't think the economy for that crowd is hurting. So I don't think there's a rush to cut, but I think, as Paul has said, 3 cuts, maybe that's a 50 in May. Maybe that's a 25 and a 50, but we'll know end of March, which is a long ways away, when we'll see another cut. So still nothing super soon in that regard. As far as reverse repo, this is the other important liquidity piece. We continue to drain this. We've flattened out a little bit. There's a question whether or not this is going to get drained completely. Bianco thinks, I think he said 300, 400 billion, maybe the floor, maybe 500 billion is the floor. It just depends on the next treasury auctions. If we continue to see chunks getting taken out of this as these funds are shifted from reverse repo to short-term treasuries, that would likely signal, continued drawdown of this. But again, from a risk perspective, if yields hold steady and someone's buying our debt somewhere, whether it's coming from reverse repo or overseas, that's much better for risk markets than competing with rising yields, getting liquidity potentially sucked out of the ecosystem. Last week, I think money markets passed 6 trillion in AUM, so that's quite a bit of dry powder that admittedly isn't necessarily going to shift back to risk markets. If rates come down, it'll probably go to longer term bonds or something, but there's still provably much dry powder on the sidelines. I also saw this. I don't know what to make of this because, again, we're talking about the weekly consumer savings data or whatever else, but US households are still flush with cash. Clearly, this is concentrated towards the top of the socioeconomic ladder. But if you're wondering, who's buying Bitcoin at 50K? Well, these people, okay? These people are buying everything. These people are buying those Super Bowl boxes. So there's still a lot of cash in the ecosystem. And we had some consumer credit data last week that was in 1.01 trillion or something relative to that savings piece. Again, like, yes, 1 trillion is a big number, but as a percentage of the total, it is not alarming. Arguably, right? Is it rising? Yes. Is it back to pre-pandemic levels? Not yet. So based on the data, consumers, certainly at the higher end rather than the lower end, are doing pretty good. GDP holding steady here in the mid 3%, 3.4%. So as far as recession type behaviors and activities, really not seeing it. Back to yield spreads for a second. As far as these go, still seeing heavy inversion in the lower end of the curve. the higher end rates slowly have been climbing here. So we are getting to a point soonish where we will see an inversion. We just, we haven't seen it yet. If you look at the 10.2, 10.3, it's just holding at this uninverted level. I guess the question is, how is this going to uninvert? I guess if rates come down from the Fed sometime this year, that could be a reason. Typically, the cuts have come from a place of weakness, which has coincided with recession. So maybe the yield curve's wrong this time, right? Certainly possible. I don't think it will be. I think we'll see some sort of recession, but so far so good. Look, I struggle to find a place where we're truly seeing recessionary type conditions for the country as a whole. As far as the dollar is concerned, seeing continued weakness here. Technicals chart pattern, the cloud still likes higher. It's still saying this leans bullish. We had the bullish reversal pattern play out as expected. We had the breakout as expected. If CPI is below expectations or at expectations tomorrow, I think the dollar weakens. If it's above expectations, I think the dollar strengthens. And that's going to have ripple effects on Bitcoin relative to 50K, NVIDIA, S&P, Qs, right? All that stuff. IWM. So this is the first chart to watch at 8:30 tomorrow, along with Bitcoin, obviously. As far as the S&P goes, we've had, eight or 9 days on Bitcoin that have been green. The S&P has had, I don't know, it feels like 20 weeks of green at this point, holding at all-time highs. There's nothing here from a technical perspective that looks ugly. There's, maybe some overbought conditions, but when this thing gets trending, just because of the natural passive flows here, in my opinion, it can hold at all-time highs and just keep crushing them for a considerable amount of time. The measured move on the chart pattern is still much higher. It's not going to get there in a straight line, probably. So keep that in mind, but it still looks like just the technicals could keep this party going. Maybe you pull back to 4,800, the old all-time high. I think that's the next place where people would be looking to get in, but looks okay. Looks okay. Qs certainly extended beyond momentum expectations based on this RSI divergence. But again, still looks okay. Week in, week out, not much has changed here. It's completed the pattern on technicals. It's busting through all-time highs. The leaders are still leading, though they haven't rolled over yet. So everything across the board looks okay in the moment. There's a little concern for me about like a lower time frame rising wedge. So I think eventually that tries to break down, but there's no major warning signs on technicals that I can see. IWM has joined the party this week, last week. I don't know if this is because of, I think it's SMCI is like the #1 component here from a percentage basis. It's still, I think, under 10% in the index in the 2000, so it's SMCI sort of leading the other 1,999 companies in this index. But this has been a pretty brutal 2-year range for this index and looks to me like it's breaking out. Targets on this would be 222 to 237, basically previous all-time highs. And this is for sure going to be rate sensitive. So if rate expectations for cuts increase, I think the IWM continues to do well. As far as the Mag 7 and some tech stuff here, Apple's cup and handle is still valid from a technical perspective. It's kind of held above that 50% level. The cloud doesn't really like it here. It's telling you to wait for the bullish TK cross. But this has certainly slowed down relative to NVIDIA and Meta. Technicals overall pretty neutral here, but if it does pull back up to 200, 218 to 230 would be the targets there. Your first sign of strength would be a bullish TK cross on the daily. Microsoft also looks really strong still. Getting closer to the targets you'd expect to take something off of this massive cup and handle. It's kind of been good night ever since this mini consolidation at 370. But so far so good thanks to that AI miracle. Speaking of AI miracle, NVIDIA breaching, 730 or something like that. RSI cruising at 80, just holding up here on the daily. I think it's likely that the fast money loves this, right? I don't know anybody excited about buying 700 plus NVIDIA who's in it for maybe the long term, but it looks okay. There really hasn't been much weakness outside of maybe today we're going to see an inverted dragonfly on the candlestick, like I said. But this continues to look very strong. I think their earnings maybe aren't until next month, but chart looks fine. I don't think there's any major concerns there. If we compare it to a similar bubble with Cisco, we're kind of in the middle of the innings here, right? Like this could keep going much, much higher, well above 1,000, and things could get stupider from here. So it's definitely not a short, it's really not a short until potentially it makes this M double top, Adam and Eve situation. So things still very silly over there with NVIDIA. Definitely in the midst of a bubble for sure. Google, like Apple, kind of just a pukey looking chart. Hasn't really gone anywhere. If it makes a clean break again for all-time highs, then maybe 200 would be the target, but doesn't look super excited to be at this level at the moment. Tesla on high time frames on the cloud, you might argue this is maybe oversold at this point. I don't think it's a buy. I don't think the technicals are screaming that this looks good here on high time frames. I still think the expectation is much lower based on this triple toppy type structure. You got a death cross a few days ago. So nothing here looks bullish on high time frames, but if we go to low time frames, there is an argument to be made for an intra-week inverted head and shoulders. Maybe this plays out tomorrow with the CPI, I don't know, but it just had a similar pattern a few months back. I just think the broad move, the broad direction here is going to be down continuously based on technicals. Netflix and Meta collectively just kind of chilling after their earnings. I don't know again how many people are excited to buy Netflix at 560, and I think you're kind of seeing that in the chart. I just think it needs more consolidation. Amazon to me still looks fine. It's well below its all-time high still. It's near all-time high territory, and the measured move from the pattern, well on its way to getting hit there between 180, 200, something like that. This looks fine to me. I think there's a mega options player who's expecting 215 sometime in the next couple months. That chart still looks fine to me despite Bezos selling. Some other individual names here. Hood continues to look okay. It's kind of looks like IWM, right? Where it's ranged for a couple of years. It's at the top of the range. Cloud doesn't love it. Cloud doesn't hate it on the weekly. On the daily, it's probably a little more generous, expecting bullish continuation in the near term. But this still looks okay to me. Square also getting ready for a bullish DK cross on the weekly. Crypto adjacent, similar to Hood, should do fairly well as rates come down lower in the year. MSTR remains in its broad pitchfork here. It's above the cloud. Like the miners, it's just kind of all over the place a little bit. Very nice bounce from the yearly pivot there at 485. Next target probably in the 800s. It's interesting. It's held below the bottom half, kind of the bearish half of this pitchfork. So something to watch for would be, Bitcoin above 50K probably means MSTR exploring the bullish half of this pitchfork, right? The top of the midline, that portion. But so far so good there. Because it's so choppy, it's hard to know what to do with this on trend, much like the miners. The miners on high time frame trend have just been all over the place. This is WGMI, the basket ETF, formed a double bottom, and it's kind of been lights out. The cloud isn't really going to help you because it went straight down, straight up. Cloud's really good at slow trend. It's not so good at crazy, insane 50% chop like that. But definitely it's a very tradable chart, tradable range for sure. And lastly here, I'll just leave you with this. As we've seen purchasing power get eroded, the lower, I don't want to say lower class, but even the middle class sort of get hollowed out. I think we're seeing a continuous rise in sports gambling, penny stock trading, as you're seeing here, altcoin trading. We're seeing more and more people get forced in a way to seek alternative methods of getting ahead because it's just become so difficult. So I don't think this is a coincidence that we're seeing people turn to markets more consistently because they're not getting that, they're not seeing a way out in their normal life, right? On that happy note, like, dislike, comment, share, subscribe, and happy trading.